We're going to start with Reinet Investments. So that is South African listed. It came about from the reorganization of the Richemont, Remgro, British American Tobacco, Rupert family group back in 2008. And it's got a bunch of things going on, but its biggest asset is still a residual position in British American Tobacco. I think it's about 4%.
Yes, 3.7%.
Market cap, just for quickly, the record, 55.4 billion rand. So it's a big Aussie 40 constituent. PE ratio, probably not all that relevant, 20.16. Dividend yield of just less than 1%. But tell us about the vehicle, what it does, how it works, how the management contract and all that
so
works.
this was very interesting because, yes, it does have a management fee. And I think there's a big distinction when we talk about these investment holding companies, whether there is or isn't one, because it determines the discount to NAV that they trade at. For example, Reinet trades at around a 30% discount to NAV.
Net asset value.
Yes, correct. Yeah. So that's a 30% discount to the sum of its parts if you bought the underlying parts.
Wrong. So why does that happen? Is it because of the fee?
Correct. I think a big part of it, so there are two parts to holding companies will trade at a discount, anything from 15 to 25%. And then in addition to that, if there's a fee structure, which in this case consists of a management fee and a performance fee.
The way that works is there's a separate sort of Rupert-controlled company that gives advice to Reinet on what to buy and sell, and they take a fee which is a function of how well the assets do, their net asset value changes, and it's performance-based. So if it goes up, there's like a benchmark, they take 10%, everything above the high water and all that stuff.
That's essentially 10%. Interesting, theirs is linked to the share price actually on the Luxembourg Stock Exchange in euros. So you've got to look at that as well, as opposed to the underlying NAV.
But in the past, they've made some pretty hefty gains because we know that British American Tobacco, the principal asset's gone up.
Yeah, that's right. So it is somewhat of a proxy still. It makes up around 67% of the NAV. And so it does track broadly.
What else have they got in there apart from the 67% that is BAT?
So the other big asset, it's grown to become almost 20% of net asset value, is a business called Pens Corp, which they actually initially backed and helped found. It's based in the UK. And it's a pensions insurance business. So what you're seeing is these large, predominantly listed UK-based companies. They've got legacy pension liabilities.
Like old employees that they've made obligations to with regard to their pension payouts.
Exactly. Defined benefit funds.
Defined benefit. That's critical because then you've got to pay the people whatever happens. So then you've got to insure that risk.
Exactly. So they are managing the liability. Really, I guess they're able to offset that liability to Pens Corp, which will manage it on an ongoing basis, make sure that the obligations are being met.
How actively involved is Johan Rupert in the asset selection here?
Yeah, I think he's still very active. And there has been some criticism because the British American Tobacco stake, which is still substantial, was meant to be the anchor sort of asset, and it would reduce over time as they diversified the portfolio. That's taken longer than expected. They have invested in Pens Corp and then also a whole lot of private equity assets. Some funds, Trilantic, which is the ex-Lehman team, that's actually done fairly well. And so, Rupert's been quite involved in that, but I think, the market's been a bit underwhelmed.
But hang on, what are you saying? Are you saying that as an investor in Reinet, you'd prefer to see them sell the cigarette stakes and really go big into one or two of these things?
Yeah, I think.
Or are you happy to hang along while it's doing well?
Given the fees that you're paying, you would, and I think the track record of the management team, you would have expected a more active approach. Look, it has been quite a tricky global environment, but there certainly have been opportunities. The private equity has done fairly well. I guess they could have put more in it.
Okay, we're going to have to go hot or not because we can't talk about this one forever. I guess it comes down to whether or not you like British American Tobacco. That share chart that you're seeing there reflects the fact that British American Tobacco sort of trailed off a little bit. They are very busy. They're doing that deal to buy more assets in America. So are you hot or not on this one?
Yeah, so I think it's still being driven by British American Tobacco. It has come off. It is a rand hedge. It's purely rand hedge, so you've got to take that into consideration. At this sort of level of discount to NAV, I think it is attractive. You're getting a cheaper entry into BAT plus the potential of the other assets hot.
Okay, I think I'm going to go not hot. I'm not a fan, as people know, of the British American Tobacco business. And I worry about them doubling down in the US, but then I do hear what you're saying about the discount. Right.